The housing market just saw its biggest shift since the pandemic. Take a look. For the first time in 12 years, home sellers outpace home buyers. That means yes, price cuts are finally here. That's good news if you want to buy a house, but it's not so good news if you're thinking about selling your house. But there's one more factor on the table that could flip the housing market again. Want to guess? Lower mortgage rates. Potentially. The Federal Reserve Bank is now seriously considering lowering interest rates to stimulate the economy and to stimulate the housing market. That's why in this video, I want to break down what's happening in the housing market so you have a better idea of what might be coming, because things are changing very quickly. To understand where the housing market's going, you have to understand where we've been. Let's assume you wanted to buy the median house in America. If you bought this median house in America after the pandemic in 2020, you were in a buyer's market because nobody wanted to buy a house. Nobody wanted to leave their homes, so you had a lot more leverage as a buyer. The median house in America in 2020 after the pandemic was around $387,000, plus the average mortgage rate in 2020 was 3.4%. That means if you put 20% down, your mortgage payment would have been around $1,373 a month. By 2021, the housing market flipped because people weren't as scared to leave their houses and people wanted to take advantage of these low mortgage rates. Now everybody and their moms literally wanted to buy a house, and they were willing to bid for those houses. In fact, we were seeing a record number of bidding wars in 2021 with people paying way over asking prices for homes, so home prices shot up in 2021. By mid-2021, a little over a year and a half later, the median house in America was selling for $470,000, while mortgage rates in America fell. The average 30-year mortgage rate was now 3.1%. That means now if you bought the same median house in America, you put down 20%, your mortgage payment would now be about $1,816 a month. But now let's fast forward to 2025 because it looks like things have peaked. Home prices have gone up and up and up. But now, because housing has become so not affordable, sellers are now being forced to give concessions and cut prices on their houses. Take a look. By April of 2025, the median house in America is now selling for $585,000, which, by the way, I'm using the US Case-Shiller Index to come up with all of these house numbers because there's a lot of different indexes out there that measure housing prices. Some are a lot higher than others. I'm using the Case-Shiller Index, while the average 30-year fixed mortgage rate is 6.5%, which means yes, you're borrowing more money, but you're also paying more interest to borrow that money. So if you put down 20% to buy the same median house, that monthly mortgage payment is going to cost you $2,950 a month. Now you can start to see why housing has become so unaffordable. The median house in America has jumped up in price by more than 50%, and the monthly mortgage payment on the same house has jumped up by around 115%, because not only are you borrowing more dollars, but you're paying a higher interest rate. Yes, we've been covering all this in Market Briefs. Market Briefs is my free financial newsletter where every day my team is working to break down what's happening in things like the housing market, stocks, crypto, the global economy, and our own economy into a fun, witty, and easy to read newsletter. It's read by hundreds of thousands of investors every morning. Plus, when you join Market Briefs, you'll also get my investing masterclass where I break down, number one, how you can start investing and building your wealth, but also how do you stay on top of and find hidden investment opportunities before everybody else. So if you want to get this investing masterclass plus Market Briefs, all you have to do is click the link down in the description below. And yes, the newsletter and the masterclass are free. And to really hammer this point home, you should also know that the median income in America has grown between 2020 and 2025 by about 20%, meaning the cost of housing has very much outpaced incomes. And this makes it very apparent that, yeah, maybe housing got a little bit too expensive, especially with mortgage rates going up, which is why now the housing market trajectory is downwards, because we're seeing more seller concessions, we're seeing more price cuts, we're seeing more sellers enter the market than buyers. And so now we have sellers competing against each other to sell their houses as opposed to buyers fighting against each other through bidding wars. Remember, housing prices are determined by supply and demand. When you have more buyers than sellers, more demand than supply, housing prices go up. That's what we saw in 2020, 2021, 2022, 2023, and a little bit in 2024. When you have more sellers than buyers, more supply than demand, that pulls housing prices lower. And that's what we're seeing now in 2025 as more sellers enter the market and more buyers are saying we can't afford this house anymore. But there's a couple things that you want to pay attention to. Number one, housing prices drop much slower than they go up. And number two, is mortgage rates could potentially go down to increase demand again. Let's start by talking about the velocity of housing prices, because if you are a home seller, let's assume that you own this house and it's valued at $400,000 today, and somebody comes up to you and they're willing to offer you 20% over asking price. They say, we're gonna give you $480,000 for your house. What are you gonna say? Absolutely. You're going to pay me more money than I thought. I will sell you that house. But if somebody comes up to you and they say, we will be willing to give you 20% below market value, now it's a different scenario. So if somebody offers you $320,000 for your, what you believe is worth $400,000 house, now, instead of immediately saying, I'm gonna cut the price of my house, you might say, let me wait a little bit longer. Let me see if I get any more offers. Maybe you'll cut the price by $5,000 or $10,000 and see what happens, because you're gonna be less anxious and excited to cut the price of your house as you would be to raise the price of your house, which is why home prices move up much faster than they go down. So keep that in mind. But then you also have to take a look at what factors could impact demand. Because if we see more buyers enter the market, well, then that could also even out housing prices to potentially not see housing prices fall. And which factors impact demand? Well, people's ability to be able to afford the house, which can include mortgage rates. The Federal Reserve Bank is the central bank of the United States, and they have the ability to influence interest rates. Now, these interest rates are not your mortgage rate, but it can influence the mortgage rate that your bank costs you. Now, President Trump has made it very clear that he wants to see lower interest rates by the Federal Reserve Bank, and up until very recently, the Federal Reserve Bank kept saying that we are not going to cut interest rates because we are concerned about tariffs, we're still concerned about inflation, we don't know what's going to happen in the economy, so we're not going to cut interest rates anytime soon. Well, very recently, President Trump met with Jerome Powell, who is the chairperson at the Federal Reserve Bank, and now we're starting to hear more discussion that maybe the Federal Reserve Bank is open to the idea of cutting interest rates sometime soon, although the Federal Reserve Bank has also said that they're not going to play politics at all. Now, was Jerome Powell influenced by President Trump? I don't know. But what I do know is if interest rates do fall, and let's just say hypothetically, mortgage rates were to go down to 5%, that could very likely increase demand. How much? We don't know. But if we see an increase in demand and it outpaces the number of sellers, that could push home prices up again. But there's two things you want to remember before I leave you on this video, which is there's two reasons that could bring us down to 5% mortgage rates. Number one is we enter a recession. Number two is because of time. Number one, if you enter a recession, well, the Federal Reserve Bank generally cuts interest rates when we are in an economic slowdown. Remember 2020, the pandemic happened, the Federal Reserve Bank cut interest rates to stimulate the economy. So if we enter a recession, a slowing economy, we could see lower mortgage rates, which would then boost the housing market in terms of demand. The other reason is if we just keep waiting until things get calmed down with inflation and tariffs, and then the Federal Reserve Bank says it's time to cut interest rates. Which one is it going to be? I don't know. But those are the factors that you want to pay attention to. So if you're thinking about buying a house, the thing that I'm going to leave you with that I always want you to remember is buy a house you can afford. Don't try to time the housing market, because what I believe is that the house that you live in is not an asset, it's a liability. If you treat it like a liability, now you can work on building real wealth outside of just the house that you live in.
How do you think that institutions profit from our financial uneducation?
Well, I think the system, our economic system, is designed to keep the majority of people poor. And our economic system is designed to profit off of when people are financially poor. Now, you might say, Jaspreet, you sound like a conspiracy theorist. Well, I'm not.